Dave Robertson with a quick update on Treasury and payments. There's a couple battles underway in the industry that are very interesting to me. One is around digitization. And I think the basic premise of digitization is it's faster, it's more efficient, and it's more data rich. So there's a lot of benefits to it. But there are many who want to slow the brakes on digitization, feeling that it might limit access to the unbanked or to the elderly who may not be as familiar with electronic methods. And I think there's also privacy concerns. Digital methods are far more traceable as opposed to cash, which, other than certain denominations, is largely an untraceable method. So a couple things on that battlefront. The first, many of you saw that the penny is being phased out. Well, what does that really mean? The Treasury has stopped the production of the blanks used to make the coins. They're continuing to produce the pennies from the blanks that are already in stock, but sometime in 2026, the actual production of pennies will cease. And it's probably a logical move. The economics are just upside down. It costs 4 cents to make a single penny. So every time we make them, we're spending more money than the inherent value of the coin. Secondarily, if you're a business and you're accepting cash, at some point, you're probably going to have to round up or round down to a 5-cent increment if you do want to accept cash. Obviously, if it's digital, it doesn't matter. You're just charging to whatever increment of measure that can be handled by the settlement network. The other thing I saw, which is I think typical of some of the battles against digitization, there's a lawsuit underway to stop the National Park Service from going to a cashless form of transactions. And basically, the whole suit hinges on the fact that Congress is the entity that defines what is legal tender, and government entities have to adhere to accepting legal tender. So that argument should be resolved at some point, but I think you are going to see some social backlash against digitization as people realize that they're going to have to use cards. All transactions are going to be traceable, and if they're ever in a jam and the merchant terminal is down, they're going to have a very difficult task in terms of how they're making payments. The other battle that I've been watching very closely is sort of the adoption of crypto versus those that are see it as risky and don't want to see it as part of the financial ecosystem. I can't pick up the financial news without seeing some company announcing a Bitcoin reserve. The latest was a company called DCC Holdings, and they're an Asian food company. The CEO actually put out a manifesto. It's not a very long manifesto. It's not like the Unabomber, but they announced they've purchased some Bitcoin. They want to get the reserve up to 5,000 Bitcoin. And what you're starting to see is the consolidation of a thesis around this. It sounds a lot like Michael Saylor. What the CEO is saying is, look, fiat currency is risky, given the inflation, given the central banks printing money. They're arguing that it is a prudent financial risk measure to hold a Bitcoin reserve. So they kind of flipped that on its end. I mean, in the past, if you were a CFO and you wanted to open up a Bitcoin reserve, people would say that's insane. Bitcoin is volatile. You're putting the company's funds at risk. Now these same companies, CEOs, CFOs are coming out and saying we're actually creating a Bitcoin reserve because if we don't, we're taking on too much risk. Will a broad swath of CFOs adopt this view? I don't know. Right now, it seems to be tech companies and smaller companies with younger C-level suite executives that are doing this. I don't recall companies holding gold reserves, which is interesting. Central banks obviously have had gold reserves forever. Many central banks are now establishing Bitcoin reserves. But what is it about Bitcoin that companies are now adopting the reserve? Part of me is a little skeptical and wondering if it's just a novel way to generate news. The other news on the crypto front, couple things. One, Bank of America came out with a study that said demand for stable coins will actually drive demand for treasuries. And what they estimate is that for every dollar that's put into stable coins, the stablecoin issuers are purchasing 90 cents of that in US Treasuries, which makes sense because if you're a stable coin, you want to be stable. You don't want credit risk, you don't want liquidity risk, you don't want interest rate risk, anything that could affect the price of the principal and change the net asset value from a dollar. So, if stable coins do take off, one of the big winners is going to be the US government because it's going to have a captive audience to sell treasuries to. And then the last thing I'll note is that Block has announced that it will allow its merchants under its merchant card processing solution to accept Bitcoin payments. And what they're going to do, and I think this reflects that we're in this in-between stage, they're going to allow the merchant either to hold the crypto in Bitcoin in a wallet, or they'll be able to real-time convert that Bitcoin to fiat. So, Block is serving both audiences, those that want to be a pure crypto play and those that want to operate within the fiat economy. So just a couple quick points, and I'd love to hear from you. If you're a CFO, are you even remotely considering adopting a Bitcoin reserve? And if you're a bank, where are you thinking about the need to support crypto-based transactions? Is this something you see as a long-term issue, or is it something you're already working on? I would imagine the banks that are merchant card processors are probably very far along in thinking through this. But what about banks that are just accepting ACH, wires, other forms of payment? Are you also thinking about what the bank would need to do to support crypto commerce and what role you would play in that? I'll talk to you soon. Bye-bye.